Welcome back to Candlestick Signals for today's market, September 9th, 2025. Buckle up, investors, because we've got some exciting candlestick signals to unpack. The U.S. stock market just closed at all-time highs with the Dow Jones, S&P 500, and Nasdaq all posting record-breaking levels. But what's really catching our eye are the intriguing candlestick patterns forming across various sectors. Are we on the brink of a major market shift? Let's dive in and find out. Our first stop is the technology sector, which absolutely dominated the market this week with a staggering 8.2% gain and a market capitalization increase of $62 billion. The software and IT services sub-industries were the powerhouses behind this growth. They got each surging by approximately 8.5%. Hardware and storage weren't far behind, posting a weekly return of 7.3%. What's particularly noteworthy is the bullish continuation candlestick pattern that formed in the technology sector last week. This positive signal suggests that buyers are firmly in control and are likely to keep pushing prices higher. In fact, we've seen strong momentum in tech for quite some time now, and there's a good chance this upward trend will persist, potentially leading to new record highs in the near future. Shifting our focus to the healthcare sector, we're seeing some fascinating developments. Multiple bullish reversal signals have appeared, with the three white soldiers pattern standing out prominently. This formation, consisting of three consecutive long white candlesticks, each opening within the previous candle's body, is a powerful indicator of bullish sentiment. The healthcare sector closed up 5.7% for the week, translating to a market capitalization increase of $43 billion. What's particularly interesting is that, despite this strong performance, the sector remains modestly undervalued compared to historical benchmarks. This combination of technical strength and fundamental value could set the stage for further outperformance in the coming weeks. Now, let's turn our attention to the consumer discretionary sector, where we're seeing some cautionary signals. Several bearish patterns have emerged, including the ominous bearish Maribozu and three black crows. These formations suggest a potential shift in sentiment and could indicate upcoming sector rotation. The consumer discretionary sector ended the week down 2.3%, with a market capitalization decrease of $18 billion. It's worth noting that this sector is currently trading slightly above fair value, which may be contributing to the bearish pressure we're observing. In the energy sector, we're witnessing a mixed bag of signals. While some bearish patterns are evident, particularly the evening star formation that appeared on Wednesday, the sector still presents some undervalued opportunities. Energy stocks closed the week down 1.8%, representing a market capitalization decrease of $12 billion. However, it's important to remember that this sector often moves to the beat of its own drum, influenced heavily by global commodity prices and geopolitical events. The real estate sector is painting an intriguing picture with its candlestick formations. We've observed several piercing line patterns throughout the week, which are typically seen as bullish reversal signals. These occur when a long white candlestick opens below the previous day's low and closes above the midpoint of the previous day's body. The real estate sector finished the week up to 0.6%, adding $15 billion in market capitalization. Given that this sector is currently undervalued, these bullish signals could be pointing towards a potential buying opportunity for savvy investors. Let's not forget about the communications services sector, which has been flying somewhat under the radar. We've seen a number of doji candlesticks forming in this space, which often indicate indecision in the market and the potential for a trend reversal. The sector closed relatively flat for the week, up just 0.5%, with a market capitalization change of $3 billion. However, given that communication services is currently undervalued, these doji formations could be signaling a buildup of bullish momentum. Now let's zoom out and look at the bigger picture. Today's market action saw the major indices forming small bullish candles, indicating mild buying interest and ongoing consolidation, particularly among large-cap and tech stocks. The S&P 500 reached its intraday high of 5,872 at 2:45 p.m. Eastern Time, before settling at 5,868 at the close. It's fascinating to note the disparity in candlestick patterns across different market segments. Bullish engulfing, morning star, and piercing line patterns were most frequently observed in high-cap sectors like technology and healthcare. On the flip side, Bearish patterns such as the bearish Maribozu and evening star appeared with higher frequency in small cap and cyclical industries, notably within energy and consumer discretionary spaces. From a technical perspective, these signals indicate a neutral to bullish bias amid narrowing trading ranges. The frequent bullish reversals we're seeing in undervalued sectors such as real estate, communication services, and healthcare point to renewed buyer conviction. However, we're also noting key resistance levels for large indices near recent highs, although downside risk appears limited as buyers remain active around support markers. It's important to highlight that small cap and value equities have been outperforming their large cap peers, but still remain undervalued relative to historical price to fair value benchmarks. This suggests there could be lingering upside potential across these segments, which is something investors should keep a close eye on. As we wrap up our analysis, let's summarize the most frequent candlestick patterns by sector for September 9th, 2025. In the technology sector, we saw 6 instances of the bullish engulfing pattern. Reinforcing the bullish dominance we discussed earlier, healthcare displayed 5 morning star patterns, another strongly bullish signal. Consumer discretionary, on the other hand, showed 4 bearish Maribozu patterns, aligning with the cautionary stance we noted. Real estate presented 3 piercing line patterns, suggesting a mix of bullish and bearish signals. Energy exhibited 4 evening star patterns, leaning bearish, while communication services showed 2 doji patterns, indicating potential for reversal. In conclusion today, candlestick signals paint a picture of a market that is cautiously optimistic, but with some clear sector divergences. The resilience in undervalued sectors and strong index closes are driving positive sentiment. But the technical indicators suggest we may see some consolidation until new macroeconomic data or earnings catalysts emerge. Investors should keep a particularly close watch on the technology and healthcare sectors, which are showing the strongest bullish signals, while exercising caution in areas like consumer discretionary and energy, where bearish patterns are more prevalent. Remember, while candlestick patterns can provide valuable insights, they should always be considered as part of a broader analysis that includes fundamental factors, market trends, and your own investment goals. Thank you so much for watching. I hoped this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, and subscribe and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.